I'm Charlotte McLeod with the Investing News Network, and here today with me is Fabi Lara. She's the founder and creator of The Next Big Rush, which is a mining media company that helps connect companies in the junior resource space with retail investors. She's also on the board of Rush Uranium. Thank you so much for joining me. Nice to see you in person.
Thanks for having me. Finally, we meet in person after COVID.
Very exciting. And so we're here at VRIC, and the first thing I want to do, you're here talking about uranium primarily. So I want to get your temperature on the space, because I know among our audience members, there's been a little bit of disappointment about kind of that sideways movement that we've been seeing. So what are your thoughts?
Okay, so a couple of things. One is I think that we need to come to the understanding that just because there is an improving fundamental story, it doesn't mean it's reflected in the price immediately, right? So that's number one, that the commodities don't move in the way that we expect them to. It's always, especially with uranium, everything is very slow in the nuclear fuel cycle, because when you have, when you're part of a utility and you need fuel, you need to be thinking for the next decade plus. So the stuff that's happening today has been contracted years ago, right? So when things are happening, supply and demand wise, that's only going to be reflected after, sometimes years, sometimes months. So that's number one. And the other thing, I think investors need to just basically be more patient, right? Because at the end of the day, if the fundamental thesis is getting better and the companies are trading sideways or down, it means either one of two things: that certain companies have gotten to a valuation that they're quite fairly valued and not undervalued, or that there's no immediate interest in the thesis because the price is standing at around $50 and it has been for a while. It's gone sideways for a bit. It's starting to pick up again this week. I don't want to speak too soon because I don't want to jinx it. And we're just talking about the spot price, not the long-term price. But all in all, I think investors need to be just more patient. And if they believe in the thesis, if they study it up, just wait it out.
Okay, so that's kind of what's going on with investors. They need to be a little bit more patient, which is always hard. What are you seeing on the company side? Because you work with many companies in the uranium space. As we mentioned, you're on the board of Rush Uranium. Yeah. How are the companies feeling at the moment? Trends there?
So the companies are just hard at work in trying to advance their projects, right? For them, I think that it's business as usual, and they do understand that even though there's lots of demand long-term for uranium, we don't know how long the good times are going to last whenever we do get to a nice price jump. And so I think they're just trying to do as much as possible now if they can get their hands on the money for a good enough cost. And they're just advancing the projects. They're drilling, they're going out there doing the work, doing the marketing, which I help out with them sometimes. And they just want to advance the projects and they want to make discoveries. The guys up in the Athabasca Basin are, starting to drill now that it's wintertime and things are moving forward. So let's hope for more discoveries and more companies bringing out some good news.
Well, cross our fingers. So those companies, they're out there, they're grabbing the bull by the horns, trying to take advantage. Are there any trends you can talk about when it comes to who is actually getting money right now to move forward?
That is a good question. So the players that are getting the best terms and the most amount of money is the companies that have actually found something that looks like it could be massive. For example, I have a client company called F3, and they have actually had a really, really brilliant, very high grade hit in the Athabasca Basin. So the Athabasca Basin is very prospective and it does attract a lot of investor capital. And they had initially a very, very good hit. So it attracts capital very easily and very quickly. And then what they need to do now is to prove up that what they have is actually as big as what the market is thinking. So those companies that can get a whiff of something that could be absolutely massive, those are the companies that are getting a lot of money.
Okay, really interesting. And I remember from our previous discussion, you like the really small companies, very early stage. So how early stage are we talking? Are we talking about even before that discovery?
It depends. So the way that I like to look at things is if they are purely exploration companies and they're very preliminary, then I need to understand if they have really high chances of finding something, right? For example, If you are right up against a really good mine or project, and geologically the structure looks like it could continue onto, your ground, there's a pretty good guess that you will find something. It doesn't mean that you're going to find something economic that's going to be, really great, but the likelihood is that you will find something that the market will like eventually. So I like those setups. Now, companies that are just in the region without the right geological setup, and sometimes that's difficult. Sometimes you literally have to go up to a geo friend and say, explain to me how this could make sense or how this doesn't make sense, right? I think we need to rely on some technical knowledge there when we don't have that knowledge and fill in the gap. But at the same time, that's what I find interesting. When companies have the likelihood of finding something, or when they already have something in the ground, which is, I think it's going to be the case of Rush Uranium because it was a former mine. And we know that if it was a former mine, there was something in the ground. We just don't know exactly how much there is, and that's what we're going to be proving up shortly. But we know there's something there. So if you know there's something there and the market isn't looking at it, that's the kind of company that I like to buy.
Okay, so in a sense, paying attention to jurisdiction and making sure it's something that's known instead of
in the middle of and don't get me wrong, sometimes you find something, right? You find something where nobody else has found, but that is difficult, and you need to be really patient to hold on to that stock until they do find something eventually. And some companies run out of money before they can find something that's really juicy for the market.
That is very true. And so I want to talk about, again, a topic that we discussed a little bit last time, and it was kind of about how you were reminding us, if you want to make these big outsized gains in uranium or probably elsewhere as well, you have to find companies that have not already run and they're undervalued. So maybe remind us what you mean about that, because I think that's really important.
Yeah. Okay. So I see a lot of people who are extremely excited about late stage developers, which is fine. I really love late-stage developers because they have de-risked their projects to a great extent. That's great, except I think you need to look at what they have in the ground and what they have calculated the valuation at. It's actually third-party, approved, so it's a lot safer than just the company putting out their own numbers. But when you get, for example, a feasibility study, and we have an idea of what the minerals are worth in the ground, and then you look at their market cap, I like to see a big gap between those two because it means that basically the project is undervalued. And a lot of these companies, their market cap to NPVs, as we call it, is very close. So it's very difficult mathematically for you to say, okay, this company is cheap, when the market is valuing that company pretty much at the same value as what they have in the ground. So there's not much room there for growth. Now you have to believe that the price of uranium is going to appreciate a lot, and that company will be producing for that to be revalued, right? That to be reflected in their net present value. So if you've seen a company that everybody loves, that everybody knows, that everybody seems to have bought, and that everybody believes in, chances are that most of the gains have been made. Not always the case, but I like to go for the companies that people haven't heard about yet because I like that growth profile better, and usually happens faster.
Yeah, so risky, but potentially very profitable. Yes. So really exciting. I want to talk a little bit about prices. So we started to talk at the beginning about prices, and you reminded us about the difference between spot price and contract price. Yes. So can you explain what you mean for people who might not understand?
Okay, so when it comes to uranium, it's a very small market. And you have two different prices, which aren't completely separated from each other, and I'll explain why. One is the spot price, so if you want to buy short-term uranium, you can, and it's a more liquid market. And then there's the contracting price, the long-term contracting price, which is when if I own a mine and you need uranium a year from now or something like that, 2 years, whatever the time frame is, then you come to me directly and we sit down like this and we write a contract and we define what the prices, delivery terms, et cetera, will be. That is more opaque. Companies don't usually come out and tell even the shareholders what they're doing contracting-wise. They don't usually give out precise numbers. So there are services that you have to subscribe to, which are not exactly cheap, of people who are literally calling up the two sides and asking, hey, how much did you sign this for, right? And so that's more opaque, except there's the spot price, which is, if you want it now, this is what you're going to pay. Now, the thing with the spot price is that a lot of people have discounted the spot market and said, well, it's a small part of the uranium commercial side, and so what you really should look like is a long-term price and contracting. I disagree with that. Reason being, there are a lot of contracts being signed now that are somewhat based on the spot price, right? And so if spot is coming in and buying a lot of pounds of uranium and the price is going up, and guess what? That is going to affect the long-term prices. And if the long-term prices become too high, then utilities are going to look at the spot price if it's comparatively low and say, we're just going to buy it in the spot market, to fill in some gaps. And then that could affect also the price of spot. And so these are two very important pricing mechanisms, but they are different because one of them is just companies sitting down and just agreeing on something. The other one is, traders, and sometimes utilities also coming in and bidding it up and selling it down as well.
Yeah, so it gets a little bit confusing.
A little bit.
A little bit, and you called it opaque. I think we hear that word all the time when it comes to uranium. So, but one part that I think is becoming maybe a little less opaque recently is other elements of the nuclear fuel cycle. It feels like after Russia-Ukraine war began, people started to look more closely at that. And one thing I've been hearing there is prices for other elements are much higher than the spot price, right? So maybe can you talk a little bit about those dynamics?
So the price and I guess the whole dynamics of anything to do with anything coming out of Eastern Europe to Ukraine to Russia to the Western world has really shifted and changed. Kazakhstan is the largest producer of uranium in the world, and they hold, I think, 40 to 45% of the general market. So that's a big player. And one of the difficulties that they have is to actually get uranium onto North America because they're landlocked. So they have to kind of sometimes go through Russia, and that's complicated because they're carrying highly radioactive material, and it's difficult for them to get things such as insurance, right, to actually get past the whole way through, and there are a lot of sanctions. And so when something is coming through Russia that's radioactive, out through, wherever they are going through, all the countries that are going to have to let that material through are saying, we're not sure if you should be, transiting on our waters. And so that becomes a problem. And the thing is that whenever COVID happened and the war happened, those two things have made chemicals really, really difficult to get. So it's really down to, can they produce more uranium and can they get it out? The answer so far has been no. Kazakhstan has just come out and said that the outlook for 2023 is lower than they predicted previously, in part because they can't get their chemicals in order to extract the uranium. They can't get enough of that. There just isn't enough available in the market. And that means that there's less supply. And demand is still there, and it's going higher.
Do you expect to see a supply response from elsewhere?
I don't know who else could turn on the spigot because they are such a massive market player. I don't think Cameco could ramp up. It's very difficult to ramp up a mine because they are usually in very exclusive places. They're not exactly in the middle of New York City where you can get people to work for you, and they're very specialized. I don't know many people, and I'm in this industry, I don't know many people that work in the nuclear industry. If you think about it, how many of your friends work in the nuclear industry? They're few and far between. And so to rehire everybody just to keep the operations going, that's very costly, and it takes a long time. And once you have your operations going, then it comes back to the same problem as the Kazakhs. How are you going to get enough chemicals, enough material, enough knowledge permitting is not getting any easier, believe it or not. So you don't have any of the ingredients that would allow you to ramp up, especially not at these prices, because it's not a good enough price to incentivize a bunch of new production. And the new mines that are coming online, they might start producing 2023 to 2024. So I'm talking about Global Atomic in Niger and Encore Energy in the US. When you start up a mine, you are producing very little material to start with, right? And so they are going to start producing a little bit, and they're not going to be contracting massive amounts for $50, right? They're going to wait until the price is better. So I don't know where supply could come from. Maybe there's a warehouse out in the middle of nowhere in the desert with a bunch of uranium that we don't know about, but I've never seen it.
Okay, so we've gone into some of the little details about the industry. We've looked at supply. If we zoom out a bit and consider demand and more broadly, I guess, changing attitudes toward nuclear energy, there's been a lot of developments, and I wondered if you could pull out maybe the most significant ones that you've seen in the last, let's say the last 3-4 months since we were last speaking, just because there's
news out all the time
time
with uranium. So if we focus on the last 4 months, I think that's easier. It would definitely have to be the Japanese restarts, because when the thing that excites me the most is the fact that China came out and said, we're going to build 150 nuclear reactors. I can't even imagine 150 nuclear reactors, right? And when China says that they're going to build something, they do build it. They don't mess around like us Westerners. And so that is really cool, but long term, because it's probably going to take a good 15 years for them to build all of them out. When we are looking at something that will make a difference today, then you got to look at Japanese restarts, because whenever they decide to fire up a plant in Japan, they're going to need the material now, and they were selling it off from the Fukushima incident in 2011. They were selling off material or sitting, on these stockpiles, and they did not come to the market to buy more, and they were selling. So they were making the market much worse by not buying and selling their material. Now they're having to buy again, which means that they need to buy it today, even if they want their plants to be functioning 2 years from now. So now that the plants are coming back online, they're coming back to the table right now, negotiating contracts and starting to buy material now. So we care about what's happening now if we want to see that price appreciate and then possibly reflect on the shares as well.
Okay, I think that's a great one to pull out. And another piece of news that I want to ask you about is the U.S. finally building its uranium reserve, because you mentioned you hear about things and it takes forever to happen. So I was a little excited to see.
I was surprised. Yeah, very surprised. So yes, the Department of Energy, I think, was the one in charge of, going out there and buying U.S. uranium, which I think is a really good signal for their national industry. The U.S. has really surprised me to the upside, because all of a sudden this new administration comes on. I think most people in the industry thought that the previous administration would do more for the nuclear industry and for the mining industry, which didn't really pan out. But with this administration, surprisingly, they're actually sitting down and saying, look, we need more homegrown uranium. And it doesn't always necessarily mean that they need mining to happen in the US, but they're going out there and buying it from US miners, which is a massive positive sign. And they're also, facilitating the next step in the nuclear fuel cycle, which is the conversion. Now, there's a facility in Illinois that's coming back online. It's due to come back online this year. And they actually got a piece of that money, of the grant, actually went to them. I think it was $14 million. So they want to invest. And and this was the good news in the permitting area, instead of giving them a 10-year permit to operate, they gave them a 40-year permit to operate. So very clear signals that the US is saying, we want to secure the whole fuel cycle in-house. And that to me is massive, and I really like the US for that reason.
Okay, and as they probably should. So as we're wrapping up, any final thoughts that you would leave investors with when it comes to uranium or otherwise?
Yeah. Two things. One is that patience is really what rewards your gains. It's not the buying or the selling, it's the holding, as they say. But also to realize that eventually you're going to have to sell. I get a few messages every now and again saying, like, I've been investing in this since 2005, and I'm thinking like, wow, like, so you were here for the last cycle. That must have been really cool. No, I didn't sell. And then I go, oh, okay, yeah, that's not good. So do understand that when an investment thesis becomes a religion, that's very, very bad, right, for your portfolio. So just make sure that if you're putting money where your mouth is, that's all good. But eventually you're going to have to realize those gains. Otherwise, you're going to miss the boat. So.
Okay, I think those are good words to wrap up with. Thank you so much for coming on to talk today. Great to hear from you about uranium.
Thank you very much.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Fabi Lara with The Next Big Rush.